Well, I think the biggest announcement that came out yesterday was with respect to Ether. We've been sitting and waiting to hear, it's been rumored for a long time, the SEC and the CFTC were trying to decide what to do with Ether and with Ripple, and whether they would be considered securities or commodities. And the SEC has jurisdiction to a certain extent over commodities, and I say to a certain extent because it's not as clear cut. It's not like if it's not a security, it's a commodity, and the CFTC has jurisdiction over it. The CFTC only comes to the table with a commodity when there are derivatives, there are instruments that are built on top of those commodities. And as we've seen recently in the announcement, the CFTC is initiating an investigation of Bitcoin trading, manipulation of Bitcoin trading, under some new powers of the CFTC as a result of Dodd-Frank Act 2010. The CFTC can now investigate manipulation in commodity prices. But that's only where they suspect that there is fraud. They can't otherwise regulate trading in commodities. So that's a very important distinction, is that they can regulate things that are built on top of the commodities, derivatives, different types of trading instruments, but they can't regulate the commodity itself, but they can go after manipulation in the prices of that commodity. So that puts the SEC, that's why the CFTC is at the table in this debate as to whether Ripple and Bitcoin Ripple and Ether are a security or a commodity. And what was said yesterday by a key member of the SEC staff, and this is one of the questions that always comes up, is how do you know, that wasn't the chairman of the SEC, it wasn't a rule or regulation, how do we know that we can actually rely upon it? And I'll come back to that in a minute, but what he said yesterday is that Ether, in current transactions for the purchase or sale of Ether, are not securities transactions. That's a lot, but it's not as much as you might think. What they haven't resolved yet still is when Ether was first released and the mechanism by which it was launched into the marketplace, they still haven't resolved whether it was a security then. So for anybody who's looking to do an ICO, you really can't walk away with a lot of comfort in that finding. So that's very important, is that you cannot, I know somebody said, oh, this is an open door now for ICOs. Anybody that does an ICO can do it this way, and the answer is no. All they said is that based on where Ether is today, that it's decentralized and a number of factors that were listed, that the feeling was that it's not a security, it's not, any transactions in it are not securities transactions subject to the SEC regulation. It still doesn't mean the initial issuance of Ether is a security, and we don't have an answer on that one yet. I know others were saying, well, this definitely means that Ripple's going to be considered. We don't know that yet either. So it's very limited. Now, the other question is, why do we rely upon it? And I think that's an important question too, is that when you've been in Washington as long as I have, you know how to read the signals in Washington. And that was a very important signal. That was a signal that was intended for the market to hear and react. The SEC generally does not do a lot of regulating, despite the fact that it's got a lot of regulations, but it's not really into regulation. A lot of what it does is by enforcement. And then by pronouncements like what they made yesterday. And the reason this is higher up on the list of pronouncements is it was a written statement and it's actually published on the SEC webpage. So the fact that you go to the SEC webpage and get it, again, puts it in a higher level of importance from an agency perspective. So I don't know if the rest of my...
No, I was going to say, so we're just waiting on Eric. I think we're getting mic'd up right now. I think we've got everybody here. They're just getting their mics on. I think we have one more question, Carol, while the rest of your team gets ready. And I was going to say, Eric and who do we have? Robby? Yeah. Okay, great. As soon as you guys have mics, head up to the stage and we'll get going. But we have one other question while they're getting ready.
I already asked this question once too. What is the difference between an unregistered security and a regular security? Because as the law I know, when you register something with a government, company, whatever, you are handing over legal ownership of that. So my main question is, when did it become illegal for an unregistered security not to be for sale in the public? Because technically the government shouldn't have jurisdiction over that, right? That's the whole point of private property. So just real quick, when did having an unregistered security, selling it in the public, become illegal?
Okay, I'm going to answer that to the best of my ability, and I should say that I am not a securities lawyer per se. I have been in the world of virtual currencies for more than 10 years now. And I have dealt with a lot of these issues in the context of the work that I've been doing, but I think I could answer the question as you put out. Let's start start with what is a security, and if it's deemed to be a security, then the question is, does it need to be registered or not in its issuance? So if we decide it's a security, then the question is, do you have to go to the SEC and register it in order for it to move from one person to another, or can you issue it and have it move from one person to another under an exemption? And so the big issue we've been dealing with in the ICO world is, are you going to take it directly to the public markets? And if so, you need to go to the SEC, or you need to find an exemption in order to allow you to get it out into the marketplace and for people to hold it. And if you don't do either of those, then you put yourself at peril for having an unregistered security, which then makes you in violation of the securities laws.
All right, and Carol, we're going to get your panel started, so thank you very much. We'll come back to that, and we can take that offline. Thank you very much. Is Eric, did your mic?
Yeah, I think so.
Okay, good. And I'll let you get back your panel. Thank you.
Yeah, sure. So thank you all for coming today. We have a fantastic panel ahead of us. I think it would do a disservice to each of these individuals if I didn't allow them to introduce themselves and provide a little bit of their background. But today we're going to be talking about investing in token markets, which ranges from the various securities laws and how it competes against innovation, and what individual strategies might be and what you might want to look out for as you look into these new and hot markets. So I'll take it away.
Sure, I'm Robby Dermody. I got started in crypto in late 2012, so founded a system called Counterparty. So it was basically co-founder of that. It was early tokenized assets. So we had some of the first working decentralized exchange, some of the first ICOs were on the platform. I think the first fully decentralized bet was created and settled on the blockchain. It was on that platform. So it was really interesting to see a lot of that stuff come about. After that, started a company called Symbian, which brought a lot of that, commercialized a lot of that technology and brought it into Wall Street and capital markets. And then started a private investment firm called Stoic Capital. So we mainly invest in seed stage startups and do a mix of equity and tokens.
Chris G, I'm the portfolio manager at Black Square Capital. We're based out of Washington, D.C. I'm mainly focused on finding investment opportunities, creating investment strategies, and things of that nature. Previously, I worked at JP Morgan, and I went to Michigan Ross. And yeah.
And I'm Carol Van Cleef, so a little bit more on my background is that I am a practicing lawyer, but I also have a consulting firm called Luminous Group, and we're now a subsidiary of a larger firm that is doing a lot of innovative work in blockchain technology called Nuarca. First real full use case is coming out very shortly, proxy voting services, where 20% of all corporate proxies are going to be moved onto this blockchain, as well as 40% of funds, and that's going to be happening over the next 6 months. But I've been in and around the space for a long time and touched almost every aspect of it, and it's now fun to sort of be on the investing ideation and incubation, acceleration and monetization perspective.
That's great, thanks. Carol actually just touched on a really interesting point, one of the use cases. The use cases of this technology, blockchain technology in general, are so broad. I mean, you're talking about proxy voting and so on. But this stuff is not, these ideas are not necessarily new. In fact, they go all the way back to, in some cases, the late 80s and into the 90s. Carol, I think we'll start with you. You have some experience in some of the previous ventures that might have existed in the space, and I think it might be useful to give some context as to where we came from.
A lot of people think that, first of all, that Bitcoin was the first digital currency, the first thing of its type, but in fact, the first experiments in digital currencies date back to the mid-90s, where we saw several types of systems being tested. The only one that survived the dot-com boom and bust into the mid-2000s was a company called eGold, E-G-O-L-D, which is a gold-backed digital currency system. It ended up running into headwinds with the federal government at a time that nobody really understood what a digital currency exchange was, for example. A lot of the infrastructure we now take for granted, the government couldn't even start to understand what it meant. And in fact, that case laid out a lot of rules of the road for what has been happening now, though interestingly enough, the principles that were applied back then are not being applied today, because otherwise we'd probably see a lot more people in jail for the kind of things that we've been seeing over the last several years.
Yeah, and we've recently seen even more commentary from the SEC, for example. But I want to kind of start with use cases and talk about where we're at. And I think, Robby, your experience with Counterparty is also really incredible. Some of the things that was built on top of Counterparty is really cool. You want to talk a little bit about how some of these applications were used and what some of the, at least in the blockchain space or the Bitcoin ecosystem even, what were some of the first things that we saw coming up in the beginning? And are we seeing that play out today with the latest round of ICOs?
Yeah, definitely. I mean, one impression I remember having back, I think this is mid-2014, was we saw some of the first ICOs, or one like Swarm, for instance, and just the amount of interest that this was attracting from both the issuer side, if you will, and then the investor side was pretty intense. It was surprising to me, so it caught me off guard a little bit. And when I thought about it, I mean, it's as someone with a business, as someone issuing these tokens or creating them, to be able to raise capital in a pretty rapid and innovative new way, but without giving up equity, is really attractive. And then you have a much wider reach for these raises, and regular people, at least at the time, could invest in them. You didn't have to be accredited. You didn't even have to expose your identity in all of these, most of these early cases. So that was really, it made sense when you thought about it. And the people buying these things, it was, I think the securities laws, I used to be more against them than I am today. I think that most of those laws ended up being there for a reason. At some point, somebody got ripped off or scammed, and they have them. So maybe I came to this space like a wide-eyed libertarian. I still have some of that, but a lot of it's been kind of whittled off little by little as I've seen just the ingenuity of humans at no work. So, but it was interesting to see that. We actually even had a system. I don't know if it was Sean Wilkinson, the guy behind Storage. It might have been his thing. I forget who did it exactly, but you could fund these things, and they would have milestone payments. They would have the funds locked up in multi-sig.
Lighthouse?
Yeah, I think it was.
So Lighthouse.
Well, no, there's Lighthouse, but this is another one,
okay.
Counterparty. So there was a few of these systems, and they never really took off because, for obvious reasons, it's better for if I can issue a bunch of tokens and get everyone's money up front. Why would people not do that if it's possible? So, but the tech is out there. It's been tried. A lot of the stuff coming back around has been tried in the past, but it was good to be part of a lot of the pioneering work of that, to see it happening. But people would use tokens for other things. I think one thing, Counterparty, that was one of the biggest things that was actually one of my favorites was Pepe Cash. It's like these fraud cards, and these people would go crazy over them, and they would buy them up and they would trade them, and they have hundreds of these things now. They all have a token on Counterparty, very similar to CryptoKitties, but it predated CryptoKitties. And it was very irreverent, but when you looked at it deeper, it was really pretty ingenious. Like you would have these digital collectibles with scarcity that was enforced via the blockchain, and they would trade totally decentralized. They trade on our decentralized exchange, so people could trade them with no middleman, no centralized exchange, and they would create them. And what I liked about it is that the shilling was very explicit. It was understood that if you create your card, you're going to shill it. And it's not like where a lot of these tokens, people make them and then they're trying to like stealth shill you their token. This is very explicit.
What does shill mean for those who may not be?
It's just like blatantly advertise your token and try to get people to buy it and hype it up.
There's also an aspect sometimes of being paid to shill. Is that a thing too?
Oh yeah, well I mean that's kind of PR firms. It's kind of what it's kind of what they do. But it was really neat to see that happening, and it has quite a community around it, and and it didn't have any kind of racist or anything undertones. It was very, I think they kept a lot of that out, and it was really neat to see that happen. So, and then we saw CryptoKitties and that kind of. So digital collectibles is actually a big area. It's one of them.
So do you feel, just a quick question, do you feel that Ethereum should have been on Counterparty, or do you feel that they did the right thing by just raising a multi-sig on Bitcoin?
I know. I mean, in Ethereum's case, I mean, you can look at the result and see that Vitalik was actually, when he started, he was going to do, he approached the Mastercoin guys. So I was one of the original Mastercoin investors, and he approached Mastercoin. He wanted to do it on Bitcoin initially. And so they weren't too interested, or for some reason. So then he basically said, well, just do his own thing. And then they attracted a bunch of people around him. That was Ethereum. When we started Counterparty, it was before Ethereum was. I remember being in Las Vegas and I was walking down the road with them or something. And they were just thinking about all that stuff in his mind. And, but it was before that. Ethereum was a thing, and the belief at the time was that by building on Bitcoin, you get the strength of the security of the Bitcoin network, and every Counterparty transaction was a Bitcoin transaction. So there was a lot of, it had the same security, all the same characteristics. So there was a lot of belief, and looking in hindsight, I think the fee situation with Bitcoin was really what made that model definitely not work out. The fees are so variable, and for something like Counterparty where they're relatively low value transactions, to pay a $20 fee is just a non-starter. And then the speed of the network. So I think Ethereum really Counterparty was an early stage tokenization protocol, and we were one of the first ones to do it. And but I think Ethereum really got the formula right with ERC20. And you would notice if you look at Ethereum before ERC20 came about, there was a lot of geekery going on, and it was really good. But once ERC20 really landed, the tokens were, these fungible tokens were really the thing that really caused it to take off. That's the main use case of ICOs even today, and that's what really caused us to take off.
So the vast majority of ICOs that we've seen today have all been powered by Ethereum. Chris, so on the investor side, when you're looking at the space, what are some of the things that are exciting you most, and why choose Bitcoin and crypto as an investment space at all, as opposed to other traditional equities?
I mean, there's a lot of things that excites me about this space. So let me start with industries like healthcare, fintech, anywhere where there's a lot of third intermediaries and where there's a lot of data management that needs to take place. There's a lot of experimentation happening. There's a lot of changes happening. There's a lot of growth happening. So in that sense, again, a lot of challenges being taken on, a lot of solutions coming into play. In terms of the crypto market as a whole, this is also with different funds and different perspectives. There has been, I guess, a wide range of thoughts in terms of how to value cryptocurrencies. And it has been interesting, every day you see a new perspective. So in the past, a lot of investors chose kind of the passive approach. Like you buy something, you believe that it is scarce, so over time it will grow in value. That was kind of like the general way of thinking in the past. A couple, I guess, months later, there was other ideas like try to base tokens based on like how much energy it needs to consume, or like how much money it takes to like run that system efficiently. Recently, also like using like the theory of money, for example. What else is there? Do you have any ideas? Just a bunch.
No, it's a proof of time and space. I mean, there's different models of, yeah.
Yeah, there's a ton. So, like, personally, like, what we do is, or what I like to do is, when I look at a token, I generally try to see it from like a VC perspective, which is kind of the general thing a lot of investors will tell you, try to understand the product, try to understand the team, their expertise, what they're trying to achieve, what their market size is, and so on. And on top of that, what I also try to like, I guess, kind of like emphasize is try to see it also from like the risk side, like is it liquid, what is the regulatory risk, what is the volatility risk, what is the founder's risk, because to be honest, blockchain projects in the end is still guided by a team of people, and if that team ends up breaking up, there is also a huge chance that that blockchain project won't go through. So that's pretty much founder's risk. So you should also take all of those risks into consideration.
That's great, thank you. I think Carol, maybe talk a little bit more about this risk aspect. It seems to me like there's this really strong, innovative energy that's taking place sort of in the ICO market. And yet so many of these companies are not necessarily shipping products, or maybe even not even solving problems. Are there risks that these investors or just the markets at large should be aware of as they're looking at these things?
Well, I think we've seen a lot about the risk in terms of upwards of 80% of the ICOs that have happened to date are scams.
80%.
I've seen different numbers.
I think I saw 83% numbers somewhere.
Okay, so you're right.
Just want to clarify.
And there's technology that's developed. There's a company called Elementus, for example, that is able to track the movement of funds in and out of different accounts associated with ICOs, so they can actually see reverse transactions happening. So let's say you raise $500,000, you can end up pumping it through different wallets and have it show up as a $5 million ICO. Multiples like that. So you've got that. You've got some other data that the SEBS group has put out recently on some of the larger transactions. So there's a lot of noise out there. There's no question there's a lot of noise. It is a wonderful vehicle for innovative fundraising, but unfortunately there are a lot of very innovative people who may not have the best of intentions and have taken advantage of it. For me, it's been interesting to watch because I've got projects across the board. I've been involved with a new protocol that's being launched on Monday, for example, that is as close to Bitcoin probably as you could get, except the world doesn't know who Satoshi Nakamoto is or who are Satoshi. But in this case, they will know who Satoshi is. I'm dealing with, I've got another project that's is non-fungible assets called CryptoPets. So much like CryptoKitties and others that are getting ready, that's built on a gaming platform. How do you actually regulate that? How do you look at that? If you're buying a pet that you're going to need to go into a real gaming situation, that shouldn't be considered an ICO or security in any way. And then dealing with fundraising and trying to sort out the types of projects that are out there, because I think that again is where there's a lot of consumer confusion, because you've got the types of projects you were talking about that are protocol based, that it's a new platform that people are investing in, or maybe a new application that's built on the platform. But there's also, I think, a growing area of blockchain development where, like the use case that I mentioned earlier, where you're dealing with pain points that exist in industry today, where there are real clients against real concerns, real companies that need to re-engineer processes. And so you have another set of opportunities out there. So when people think ICOs, it's very important to, we were doing utility versus security token. We're doing, platform token. There's like 6, 7, 8 different types out there. But to really understand what it is that you're investing in is incredibly important.
Absolutely. So I think it would probably be important to kind of look at the problems that we are actually trying to solve. And you mentioned actually this idea of the fees being too high, for example, on the Bitcoin blockchain. For example, for those of you who haven't followed, we saw a pretty significant split in the Bitcoin community when the Bitcoin Cash users split off because they wanted to change some of the fundamentals. So I think that's an example of maybe a problem that could be solved. I mean, they changed it to, they claim to reduce the fees. What are some of the other problems that maybe these companies should be attempting to solve right now that maybe would be interesting down the line if they do actually solve those problems?
Yeah, I mean, on the topic of Bitcoin, it would, I mean, with Bitcoin, there's an idea, a very specific idea of decentralization and what that means. And part of that is having a concept of a fee market. So with other people, you butt into, with crypto, I think originally started, you had a much more homogenous community, and it formed out of, the cypherpunk movement. You had a lot of libertarian type-minded folks joining up. As it's grown, one thing was Ethereum came around, very different feel of the community with that. These were people that a lot of them were not really interested in that kind of traditional mindset that we saw when we got started. So you have, and nowadays we have everyone. It's just like it's beyond just like the original geeks and the early speculators that joined. We have people trying to build a legitimate business on it. We've got tons of scammers. We have just everyone in this space. And it's great to see the experimentation, not the scamming, but the actual legitimate experimentation going on. But there's a lot of different approaches happening. I mean, I'll bring up a list here. I think I put together kind of different approaches. So I think fields where the technology has some real value, security tokens, obvious reasons. That one has been hyped, talked about when we started.
And this is explicitly to grant access to securities to a much wider audience than traditionally available. Is that the problem?
That's one of it. So this is, when I say security, I'm specifically talking about private equity. I'm really focused on that. So with private equity, you get a share in a privately held company. Traditionally, it basically sits on some lawyer's Excel spreadsheet on his computer somewhere, and it's really tied up. So liquidity, it's tough to get liquidity. These things generally don't really trade on the secondary market. Barry Sievert, the guy who started DCG, one of his early companies was Second Markets, and he's traded Facebook shares. That's where he really got a name. He's had these Facebook insiders. They got these shares, but they needed liquidity, and people wanted to buy the shares. So, but with the tokens, you can really tokenize that. You can get, as you figure out the legal issues around that, materialize it. But the promise of the technology is you can get very rapid liquidity. You get a larger market exposure to people that can be interested in purchasing it. You can have potentially automated corporate actions happening.
So votes through blockchain.
Yeah, like proxy voting, things like that. So there's a lot of things that can happen with that. And that's something we saw with Counterparty was way too early. We were anonymous because we didn't know how the government would look at any of this stuff. But it's finally starting to be time for that technology. And we're seeing a number of startups. I advise one Polymath, and then there's we have a stake in another one in the UK. So there's a plethora of startups coming into that space because the idea is ripe. So it can add immense value in that space. It's more than just hype. In the finance world, things like corporate bonds, small medium business loans, syndicated loans, trade finance. So these are like more esoteric fields where they're inherently decentralized markets. So you look at something like treasuries, that's kind of a centralized market, and those are very efficient these days. The execution and the software is really good. It's very quick. That's not as I would consider lower hanging fruit, but like corporate bonds, they, the company will issue its own bonds, and there's all these different issuers of these bonds. It's an inherently decentralized market, and how people will shop these bonds as they call their broker friend, and he calls some other guys, and he tries to find liquidity for them, or they send emails to each other. That's how it's happened, and so that's a good place for blockchain as well. I think privacy applications is another big one. So these are things like Monero. There's a system called Orchid where you can have access to. They're working on it where you can have you want to have network connectivity, and it's kind of a marketplace for network connectivity. So this is slowly but surely, people don't really value, they're starting to value privacy more with this whole Cambridge Analytica and the European regulations. But so that's the trend is starting to turn with that, but it really hasn't, ease of use generally will trump privacy, but it's going to become, Monero, for instance, is like the new digital cash. I think and there's double-sided sword, but I think it's a good thing overall.
Chris, do you see any of these particular industries being exciting from an investor standpoint, or do you see perhaps an upsurge in one area but not others?
Yeah, I mean, as I said before, currently, like in finance and healthcare, even in government, a lot of money from users, from the institution is spent on third-party intermediaries. And I mean like a lot of money, like billions, sometimes trillions of dollars, depending on what specific problem you're focusing on. With blockchain or a solution where you imagine data, and people can upload things and download things, and it's based on a decentralized system where trust doesn't matter as much because you trust the system, then you can get rid of all of these third-party intermediaries. That means healthcare costs could go down by 20–30%. It could also mean a doctor could save someone's life, maybe like 20, I guess I should put percentages on lives, but a doctor could save someone's life because they get the data faster compared to the past where they had to go through all these intermediaries to get the data that they need about this patient. Like even in finance, like what was just stated, like it takes like sometimes 3 to 4 days to 5 days, depending on what financial product it is for that thing to settle. With blockchain, you can make it settle in like 1 second, 1 minute, versus 3, 4, 5 days, which, to be honest, like time is money. So again, that is worth a lot. So any industry where we're getting rid of third-party intermediaries, any industry where we're making things more efficient, faster, more capable, I mean, those are like where it is truly exciting.
So you're really across the board right now as an investor, because it seems like these technologies really disintermediate a lot of different things, right? So you're across the board, you would say?
I'm across the board, but it also has to make sense, right? Like, blockchain is not the solution for everything. I need to make that clear.
Okay.
Because there seems to be this spirit or hype that let's just apply blockchain to everything and we're all gonna be happy. But the thing is, like, that's not the solution. Like, there are some basic rubrics that you can find online, like when blockchain makes sense and when it doesn't. I think some of the rubrics are like, is it data management? Are there a lot of users? Does it need to be super efficient, or can it be efficient enough? There's all these rubrics you can find online, and I think that can kind of help you in a general sense to know if blockchain works, at least with the current capabilities that we have today, or if it doesn't.
And I kind of want to play off a little bit of Robby's point too. It seems like the privacy aspect, at least when I got into Bitcoin in the beginning, it was explicitly about protecting your own self-sovereignty and your own personal rights. Are you seeing any growth in this area from the investor side? Are there companies coming in focusing on this aspect now?
Yeah, I mean, there's a bunch of companies out there that are focused on privacy, like Zcash, Monero, and so on. But at the same time, I think a lot of money is going into projects that do care about privacy, but they care more about scalability, because in the end, with the current technology, the more you make something scalable, you are kind of reducing the security features, for example. So it really depends on what the objective is. But a lot of money, from what I see right now, is being thrown into projects where things can scale, like a lot of people or companies can use it, where it is efficient, versus, let's say, like traditional old solutions where it was more focused on like top-notch security with no points of failure. I mean, no points of failure is important, but no points of failure at like a national, global level. Because again, like a lot of like blockchain projects, a lot of like dApps and so on, like a global national level, like having like that level of security is not as important because that is not the objective of like those type of platforms or apps.
No, I look at this also, I'm excited about the prospect of being transnational, right? I mean, the idea of Bitcoin, for example, was that you can spend one currency and cross these borders and not have to worry about it. But then playing off of the regulatory aspect, it's slightly concerning because now that there are so many different jurisdictions that can apply to these different things. Carol, maybe you have some thoughts on international cooperation, or what do you think the impact will be as you know, the U.S. seems to be leading the regulatory charge, and in some cases is just being, the United States as a result is being excluded from participating in these financing operations.
Well, we're being excluded from a variety of diplomatic situations, or self-excluding ourselves. No, we won't get into that. I think the explosion in ICO activity middle of last year, starting about this time last year, made the world an incredibly smaller place overnight. And I don't think that people really have totally understood that yet, because the SEC, which did have at that point 3 or 4 years to get ready for it, you go back to Mastercoin, Ethereum 2014, and some of the even earlier activity, we knew it was coming. It was clear that we were on the verge of something happening, but then suddenly it hit. And the SEC was clearly left in a position of scrambling very quickly. But the SEC now has put together an national working group. I don't know how many countries are involved in it, but we've certainly seen at least anecdotal evidence of many of the countries that are taking steps very similar to what the U.S. has done. I think, though, at the same time, I think people have been too critical about the U.S. being not the greatest place in the world to launch a business like this. At the end of the day, most of that activity is happening here anyway. Regardless of whether there's a company set up in Gibraltar or Malta or Singapore or whatever. We do see some pockets in Singapore, being in particular, or Hong Kong, where there is a lot of activity starting to happen there, but it's still vast majority. And if you look at and you trace back the various players, it does come back to the United States again and again and again. But it's clear that the regulators are looking. They understand this is truly international. Once you post an ICO online, it's in every country in the world, as long as you've got internet access. So that there is a great challenge on that point.
Okay, we've only got a few minutes left, and I want to just make sure that we focus on, helping the people in the audience have a healthy perspective of the space. So maybe we'll go down the line and just spend about a minute each talking about what are things that investors should look out for, should be wary of, and what are the things that you view as positive for a potential investment in the space.
Sure. I mean, the thing you have to remember that these are ICOs are for new tokens and sexy tech, but at the end of the day, you are investing in a company, either explicitly a company or something very much like a company. So just spend the time to learn how to look at. Like I think one big thing that a lot of people miss is like look at their plans for what they want to do. Are they putting the risk right up front, and they've already tackled the largest risk, or have they moved it to the back and it's kind of on their roadmap? There's these things where we're going to have these. I saw this one my brother sent me, and I was like, dude, do not invest in that thing. It's, oh God. And it was like, we want to have smart contracts. Artificial intelligence can write them. And I was like, yeah, every computer scientist over the past 50 years has been trying to work on that one. But it was on their roadmap. And what do they currently have today? They just forked Ethereum or something like that. So those are really one big thing to watch out for.
Copycats?
Well, copycats, but when they advertise very sexy features and then they put it on the roadmap that they're going to work out with, 99% of the time they never really even get there, or they kind of half-ass it, and then they have all your money and you don't. So,
Chris?
Also, I recommend looking into liquidity. I'm not too focused on the pre-ICO or the ICO market. I'm more focused on cryptocurrencies or digital assets that are already on major exchanges. And like liquidity is very important. Like for example, I know the SEC is kind of going towards the way we want them to, but imagine a world where tomorrow SEC says we're banning everything crypto related. If you don't have that liquidity, basically your $100,000 investment, your $10,000 investment could pretty much go down to zero or like $1 in a couple seconds. So I think like looking in terms of like liquidity and how much liquidity risk you can take on is like very important, at least at this moment of time.
Market depth. Yeah, okay. Carol, final word.
So there's several points that have been raised that I'd like to go into in depth.
Of course.
I've been spending a lot of time on remediating ICOs that have happened. And I also sort of have a presentation that is Know Before You ICO. And I think for those who are looking to use this as a technique or have used it, if you've done it already, you've got issues. And if you haven't heard from your lawyer, if you consulted a lawyer in the first place, since you did it, you need to make some phone calls right away. So there's a whole set of issues around those who've already done it. We can learn from those who have done it on how to do it right, but I keep seeing over and over again, oh yeah, I've got a lawyer. Well, who's your lawyer? Well, it's a lawyer that might be a zoning lawyer who doesn't really, I mean, the lack of experience, but also just focusing on a securities lawyer is not either. You need a combination of talents to come to the table. I think in terms of looking forward, in terms of making your investments when you move to that category is again, understanding what it is you're investing in and recognizing, I think that a lot of the ICOs that have happened so far, the investors have no real recourse. They have no way to hold accountable management team for what they're doing with all the money that's been raised. And I think that's a huge, huge issue that sits out there in the marketplace. Going forward, I think we're going to see new types of securities tokens that are created that are going to give the participant, the token holder, more play in the game, so to speak, more action. And I think those are the kinds of things we're looking for. Now that, again, that's where you're looking at a securities token. That's a pure security versus you're making an investment in a token that may be security that's platform-based that represents new technology. And look for adults in projects.
Adults? Okay, one final word from each of you. Bull or bear? In the markets in general, like, where are we right now? Are you bullish or bearish?
Yeah, I mean, it's easy to lose a reference point in these markets, especially if this is your first rodeo. It seems so brutal, but it's going to be a little bit more bearish for I think a little bit. But there's an emotional cycle the market has to go through, and but yeah, hell yeah, bull long term, man.
Okay, all right.
Depends on your perspective, but I mean, long-term wise, definitely bullish. If it wasn't, I don't think any one of us would be here right now. So yeah, bullish, optimistic.
So my answer is in the early 80s when I was in law school, I wrote a paper on electronic money. 10 years ago when I went 2 feet into this gold-backed digital currency system where I got hired to help clean up a lot of problems, I saw the future and there's no turning back for me. And that's why I'm here today.
Okay, well thank you very much to our panel.
Thank you.